Hey guys, welcome back. In today's video, we are talking about taking AMC to $600, apes gaining strength, how the shorts are complaining, and many more in this video. First, if we're taking a look at this, he really couldn't be more explicit. And winning means delivering with interest on expectations CEO Adam created when AMC was at 592. No date, but AA has the tradition to win before his 10th anniversary as CEO, which for AMC happens to be end of year. And so if you take a look at Adam Aron, especially recently, he's been very focused on talking about the fundamentals of AMC. Now, of course, as the CEO of AMC, that's something he will always do. But especially recently, we've seen him really focus on talking about the recovery, talking about the industry, and talking about everything as a whole for AMC. And that itself, when you compare it with the recent fundamentals that we've talked about, is all showing how Adam Aron's main focus right now and the point he wants to get across is essentially improving AMC to the best fundamentals that it can be and to take it to the point where it was when it was at the high, which of course in this case 592. We have to realize is that we were able to get so much capital inflow for AMC at a time where the fundamentals weren't as good as compared to now. So when AMC is able to position themselves now to the point where they're of course talking about profitability, we talked about share buybacks, we talked about dividends, you can only imagine not only how much institutions is going to buy into AMC on top of what they're already doing, but also how shorts are going to be having an extremely hard time. And so this is what we've said with how it's Adam Aron's mission to of course bring AMC as high as possible, especially when he's able to profit the most from that. And so we are of course keeping close attention to what Adam Aron's doing and especially what AMC is doing. And it's without doubt in my mind that right now Adam Aron's trying his best, especially with the trump card he is yet to release. We talked about with the certain news that he's held that is prohibiting him from buying AMC shares. That I think will be a massive game changer for AMC. Now, we just talked about this. Institutions are still loading up on AMC. Vanguard 44 million shares, BlackRock 32, Marshall Walls 12 million, Geode 10 million, over 195 million shares held by institutions, yet they tell retail to sell. So if Wall Street won't go, why should we? Now, a lot of things we have to talk about is that it isn't obviously just these four institutions. We've seen recently a lot of institutions have been drastically changing their ownership of AMC. We've seen them double, even triple, sometimes even more than that on their ownership of AMC. Now, that all just leads to one thing, which is that institutions want shares of AMC, that they're willing to buy as many AMC shares as they can, as cheaply as possible for the time being, because they realize that AMC is extremely undervalued right now, and that if they don't seize on this opportunity now, AMC is going to become too expensive for them, and of course, they're missing out on that huge value potential. But of course, when we take a look at some of the biggest ones that are obviously holding on, we talked about Vanguard, we talked about BlackRock, you can see 44 and 32 million respectively. Now, the problem with this is that, firstly, when you see these institutions telling you to sell, you have to realize that they are doing the opposite. They only want the retail to sell so that these institutions can buy up as many shares as possible, as cheaply as possible. But on top of that, it's about the fact we've seen companies like Vanguard to obviously lend their shares out, because for them is that they realize they can make profit from this multiple ways. They realize that a short squeeze will happen, is inevitable, but the shorts will do as long as they can, as much as they can, to obviously prolong this. And so Vanguard is trying to make money in the short term and long term. In the short term, they're more than happy to lend these shares out at a very costly price towards these institutions who obviously wants to borrow them. But for the long term, they realize that not only is AMC extremely undervalued, and this is talking about without a squeeze, that AMC is still able to deliver them 10x, 100x returns on real price discovery. But when a squeeze happens, you're looking at 1,000x, 10,000x returns. And that's why companies like Vanguard and BlackRock are still increasing their positions. This isn't a position that they've racked up throughout, just the last 5 years and haven't done anything with it. But this is something that they're constantly accumulating. They're constantly increasing the ownership in AMC. And so this is what we have to understand, that these institutions all want AMC shares. And then you can see on top of that, so one of the things we talked about is that if everyone's buying AMC shares, why is AMC price not going up? And by now, you should be familiar with the dark pool. And we can see once again, AMC starting off the day with 71% dark pool. Next coming in at NYSE for 6.31. And so if you're wondering to yourself every day, why are we not seeing real price discovery? Surely it can't be that the price of AMC is being manipulated every single day. Well then, guess again. Because AMC price is being manipulated every single day, and it isn't just done with one method. When you take a look at AMC's data, firstly, off exchange every single day is extremely high. And then you will realize there are spoofing and these sell walls happening on AMC every single day, which we've talked about, and done by multiple other companies. We've seen it with Virtue, we've seen it with Citadel, we've seen it with Goldman Sachs. And if you take a look at the FTDs, if you take a look at the tokens, all of these things are strategies used every single day to manipulate AMC. And so this is why it's so difficult for AMC to show real price discovery, but then it also just highlights just how undervalued AMC is. And you have to understand this. This is the data we've seen in the past with how many shares of AMC is unsettled in the DTCC. And if you want to look at just how undervalued AMC compared to just remember, these are the shares that are unsettled. This isn't talking about where AMC should be, but this is just talking about where AMC will reflect when the unsettled shares being settled. 9.6 billion notional value of all shares unsettled. Once again, there's a difference between where AMC should be fundamentally, what a true price discovery is, versus when the unsettled shares should be settled. And so in this case, we're easily looking at AMC to be over $10 billion. Yet, because they're not settling this, because they're hiding away from all of this, we are not seeing that real price discovery. And now the biggest thing is something that we've been talking about, is that shorts are so pathetic, they can't drop stocks like they used to be able to. Retail is gaining strength, knowledge is power. Now, we've always tried to expose as much as possible on this channel, along with many of these, the tens of thousands of apes doing the same on Twitter as well. We try to make sure people understand what is going on. And just like we talked about, we've seen it with the dark pool. And remember, dark pool is something that they used for a very long time. And in the past, dark pool has been so much more powerful than what it is now. And what I mean by that is that they've managed to hide a lot more buy orders in the past with the same dark pool percentage. The reason why they can't do it right now is because right now, firstly, they don't have that much liquidity anymore. They aren't able to, whilst hiding the buy orders, but also be able to make so much sell orders like they can in the past. But on top of that, it's because retail apes know exactly what's going on. They're right now more than ever in terms of confidence to buy into AMC shares, even if they were to see the price drop, because they realize that the drop isn't a reflection of, is this company bad? Is this company going bankrupt? Is everyone selling? But they know that it's because of the manipulation. And so that they realize that when they're buying to this share and it's going down, it's not because it's a bad investment, but because they realize that this is the long-term play. And so that's why we know that the shorts are losing power. And if you want to see another proof for how shorts are obviously losing their power, you want to take a look at the reverse repo. We're seeing it sitting at 13.7. Once again, highlighting how much liquidity is lacking from the shorts. And like we've said, when this goes to zero, which it will, we are going to be seeing all of these shorts panic. One of the biggest reasons for why you're seeing the increase in FUD, why you're seeing the increase in dark pool percentage, why you're seeing the increase in shorts trying to borrow as much money as possible right now, is because they realize that they are all starting to slowly bleed out of liquidity. And they know that it's right now, it's a countdown before they can get access to zero liquidity. And when that time comes, that's when they realize they won't be able to suppress AMC. And that's when we'll see AMC explode. And you can also realize that US market valuations are way above the 2000.com bubble levels. The share of S&P 500 firms with a price to sales ratio above 10x hit a record 34%. So shorts are worried right now, and why institutions are buying AMC is because they've realized that we are going to be seeing a massive market crash. And they're all going to be seeing all of their collaterals vanish. They're going to see all of their liquidity vanish. These institutions are worried that all of these, firms are going to lose, but the ones that will prevail in this is going to be firms like AMC. It's going to be like firms like GME, who are extremely undervalued, yet they're able to thrive. Now, as always, this is financial advice. Do take advice going so make sure to do your own due diligence and research, and I'll catch you guys next time.